Good morning. It's Alex with your Main Street briefing for Monday, July 13th. Today, the SBA just doubled how much you can borrow, the Fed holds rates for a fourth straight time, and small business optimism is stuck below average with a fresh reading due tomorrow. 3 stories, 5 minutes, done. First up, capital. As of July 4th, the Small Business Administration lets you combine a 7A loan and a 504 loan for up to $10 million in SBA-backed financing. That's double the old $5 million cap, and it's the highest limit in the agency's history. Here's how it works. Qualified borrowers can take up to $5 million through the 7A program for working capital and up to $5 million through 504 for real estate and equipment. The two used to be linked, so a big property loan ate into your working capital room. Now they're decoupled. Why does this matter if you're not borrowing 8 figures? Because it signals the SBA is loosening limits that hadn't moved in over a decade, and lenders tend to follow the ceiling. If you're a manufacturer, a restaurant group, or any capital-heavy business that was told you maxed out your SBA borrowing, that ceiling just moved. The catch is the same as always. You still need the credit, the collateral, and the cash flow to qualify. What to watch? If you already have an SBA loan, ask your lender this week whether the new $10 million combined limit reopens room for a 504 on equipment or property. Second, borrowing costs. The Federal Reserve held its benchmark rate at 3.5% to 3.75% in June, the 4th hold in a row. The Wall Street Journal prime rate stays at 6.75%, and that's the number your variable business loans and lines of credit are pegged to. So if you were hoping a summer rate cut would lower your monthly payment, it's not here yet. On the SBA side, 7A variable rates are running roughly 9 to 9.5%, prime plus 2.25% to 2.75%. Bank term loans for strong borrowers range from about 6.5% to 11% depending on your profile. The one bright spot, SBA 504 fixed rates for real estate and equipment sit around 6 to 7.5%, and rates overall are the lowest they've been since 2022. If you've been sitting on an equipment purchase waiting for cheaper money, the math may already work on a fixed 504. What to watch? Pull your current variable rate loan statements and check the prime peg, because at 6.75%, refinancing a high markup line into a fixed SBA loan could cut your interest cost before any Fed move. Third, sentiment. The NFIB Small Business Optimism Index sat at 95.3 in its most recent reading, below the 52-year average of 98, and it's been stuck there for months. Inflation is back as the number one problem owners name, the highest reading on that since December 2024, and the uncertainty index jumped to 91, well above its historical norm. Translation, owners aren't panicking, but they're cautious, holding off on big hires and big purchases until they see where prices and policy land. Here's the operational read. When the net share of owners planning price increases is near a multi-year high, it tells you your competitors are also raising prices, which gives you a little room to pass through your own cost increases without losing customers. The July index drops tomorrow morning, and it's the clearest monthly gauge of whether your peers are getting more or less willing to invest. What to watch? Check tomorrow's NFIB release for the hiring plans and capital spending components, because if those tick up, it's your signal that demand is firming and it may be safe to greenlight the delayed hire or purchase. That's your Main Street briefing for Monday. I'm Alex. Back tomorrow with 3 more. Go run your day.